Welcome to Wealth Talks, where we talk about solutions, money, and other things that create wealth in your life. John, it's always good to cut this little podcast and share the things that are pertinent to our hearers and hopefully benefit them and help them move down the road to greater prosperity and wealth.
Yes, it is. It's fun to do this.
You know, I can't help but think of the verse that out of Isaiah in the Bible that says, "Your rulers are rebels and companions of thieves. Everyone loves a bribe and chases after rewards. They don't defend the orphans nor the widows, and the pleas come before me." And, you know, we're going to talk today about some things that are kind of shady that are taking place in our community. And the American people understand this. They are angry at the monopolies that are taking over true capitalism and freedom. And we see that in the social media network. We see it in the corporate world. And yet sometimes people are blinded by what's really happening because of these bribes and shady deals that are taking place in the back room of politics.
Yeah, it is really politics at any level, whether it's the political level that we think of as in Washington, D.C. and the governments, or whether it is in companies. For example, if we're talking about the media, like AT&T is buying out Time Warner. That was recently in the news. Comcast owns CNBC, I think it is, in NBC or CNBC, one of those two. And Amazon.com owns the Washington Post. So when you were talking about a media like that, that's publishing information that's read by a lot of people and trusted by a lot of people, and they don't know the two are associated,
yes,
there can be a conflict of interest there.
There is a conflict of interest. It's not just could be, there is, because you have to follow the money trail.
Yes.
You go back to the bribe, and that's why God told his people, "You shall not take a bribe, for it blinds the eyes of the clear-sighted and subverts the cause of justice." And we have become a nation of bribes in America instead of a nation of freedom and liberty for all. Mm-hmm. And it's got to stop, or America is going to go down the tubes.
Yeah. And it's happening all over. Even, we talked about the government and the media level, but it even happens in the financial world.
It does.
Very, very prevalent. A lot of people demonize Wall Street for the insider trading and the backroom deals that go on. Even in the mutual fund industry.
Right.
What happens is, and Forbes brought out an article on this recently, I have it right here, and it says, frequently mutual fund managers may direct the money being managed to brokerage companies, providing them with research and other services. Even if the brokerage companies are not providing the most cost-efficient commissions involved with buying and selling stocks. So what they're saying here is that these brokerage companies are giving the mutual fund managers research and other services.
And they pay them an extra costly
fee. It's a quid pro quo here.
Yes.
And so the mutual fund manager puts the money in here, even though they charge a higher rate. It's a bribe.
Well, that's one of the reasons Warren Buffett says that diversification is for people who don't know what they're doing. People don't realize what's happening behind the scenes here, so they pay a higher price for something they could get cheaper someplace else. Yeah. And just because you're going with a mutual fund managed by a big company doesn't mean you're getting the best deal because of this type of pay-for-play stuff.
Yeah, it's an insider trading thing. And a research study recently suggested that these are called soft dollar brokerage commissions, that they could total up to $1 billion a year, about 40% of all equity trading costs.
That's huge. That's huge.
Yeah. And fees and taxes are the two biggest negative effects on accumulating wealth.
Well,
so that's what we're out to fight against.
And I think the biggest place we can see this playing in the financial world right now is the Department of Labor's ruling that says that, fees and commissions are a different thing. And if you're going to be a commissions-based advisor, then you got to abide by these rules. And if you're a fee-based advisor, then you get a pat on the back and a blessing and you get to move up. And everyone then comes out thinking that commissions are bad and fees are good. But that's not necessarily true either, is it?
No, it isn't. It comes down to the integrity of the person that you're working with. If somebody doesn't have integrity and they're working based on commission, they'll sell a big product up front, make the commission, and you'll never hear from them again. If somebody with fees does not have integrity. We see this type of backroom trading going on where they're doing a quid pro quo arrangement and making their higher fees. And they go after the people with lots of money because the fee on a big sum of money is a lot bigger than the same fee on a little sum of money.
Well, we're already seeing that. You can just Google it and find out that to manage a low dollar portfolio costs you a higher fee than the management on a high portfolio. And they justify it in saying, well, we're going to make up our money in volume so we can charge a lower rate. No, that's not really what's happening, because the same decision process takes place regardless of what the portfolio balance is. What's happening there is they're rewarding people that put more money with them
because they can make a little bit more.
And so again, it's not a balanced situation. And it's really pathetic. And we really need to be aware of where the bribes have taken place. And sometimes that's hard to do when we're looking at a media that's been bribed and bought off. Or, look at the association that the media has with some of these larger companies or politicians, and you realize that we're not getting a straight scoop.
Yeah, some of the banking regulations that are passed, a lot of them, are affected by the lobbyists and everyone that the financial industry puts in there. Here's an example of something that is happening right now. In 2007, I believe it was, Teresa Ghilarducci wrote an article about the new guaranteed retirement accounts, which is a proposal for the government to take and roll over all 401ks, IRAs, tax-qualified plans into these guaranteed retirement accounts managed by Social Security. But here's the catch. Social Security is not going to manage the money. They're going to have oversight over it, but the actual management is going to be done by investing firms. So the president of BlackRock has come out in support of this.
Oh, of course. They're going to be managing it.
That is guaranteed business for an investment management firm like BlackRock.
Well, it's just like Obamacare, the insurance companies, the health insurance companies, all behind that, because they realize this is a way to get out of their liability to pay for sick people's care. And it all was written that the government was going to pay for it, and the taxpayers were going to get stuck with the bill. That's been known from the very first for anyone that dug through all that 2,000 and some page bill.
It's interesting, though. Some of the insurance companies, though, are backing out of it now.
Well, that was in the process, too. If they didn't like what they got, they could just drop out. There was no liability to them, so they supported it.
I see.
It was all making money for the insurance companies and the politicians, all on the back of the American taxpayer.
Yeah. So, Dad, you ran a recent comparison on fees versus commission.
I did.
And you want to tell us a little bit about that, because that was quite interesting.
It was a client that was concerned because his wife was wanting to invest more money rather than just buy life insurance. And there's a reason and a cause for both buying life insurance and investing. And we think both here at Life Benefits. We're not an either or.
Yes.
It's got to come. We've got to do both in life. Otherwise, we're not going to be able to continue to prosper and create value. But just for the comparison, we ran a 5% rate of return for 30 years on the same amount of money that they would be paying in life insurance premiums over those same 30 years. And what happened on a 5% rate of return, they came out with about $240,000, and the life insurance came out with about $241,000, relatively the same. But then we added the fee to manage that investment, which on a national average is somewhere about 1.12 for that amount of for that kind of a portfolio. But we just ran it at 1%. And what happened is, over the course of those 30 years, the fee-based investment cost them $34,000. So they ended up with significantly less money in their investment than the life insurance would have given them.
And the fees are going up every year.
And the fees go up every year.
Hurts their compounding.
So it hurts their compounding. Besides this, when they're all said and done, if they've been doing this in a tax-deferred environment like most investments are with the middle-class Americans, then they get to pay taxes on that, $201,000 or whatever, $204,000 they have left on their investment, whereas the life insurance has regulations built into the IRS code that allow us to spend that money without ever paying a dime of tax on it. And so significantly much different. Now, the fees versus the commission question came up here too as well, and $34,000 for the fee-based investment. The commission they will pay me on that life insurance policy is less than $6,000.
All right, there you go.
So there's a huge difference there. But the cool thing is my commissions never came out of their profits, or never came out of their profits, never came out of their pocket even, because the premium was paid. Mm-hmm. The insurance company invested the money, and from the investment of the insurance company, that's where my commission comes from.
Right. It's seen as one of the expenses of the company.
Whereas on an investment, you invest your money, the manager does well or does poorly, it doesn't matter. They're going to either take it out of your pocket or out of the profits of your investment.
Yes.
It's going to come directly out of there. And so that $34,000 is a hard number that you lose, whereas the $6,000 is not a hard number you lose. It was never part of what could be your gain or loss in the first place.
Yeah, it's just accounted for as part of the expenses of running the company.
It's part of it, yes.
Ultimately, it does come from policies in some way, but it's coming from across the insurance company. They have it worked in.
It's a hard number that is already figured into the cost of insurance, so it's not a hidden fee that's going to surprise you in the end.
That's right.
Whereas when you start working on a percentage basis of gains or a percentage basis of money managed, that number can significantly rise year after year after year, and it compounds against you.
Mm-hmm. Sure does.
So all in all said is that there's a place for fees, there's a place for commissions, there's a place for understanding who's behind the money. Because a wicked man, the proverb says, receives a bribe from the bosom to pervert the ways of justice. And if we don't have a just and fair system in what we're doing in managing our money, then we're going to come in on the short end of the stick of it.
And really here with all the new fiduciary rules, especially, it's the little guys that are going to get the short end of the stick.
It is.
The fee-based advisors are going to be going after the people with more money to invest.
It is.
People with smaller portfolios are not going to get the service that they need.
They're not going to get. It's just like Obamacare. People are losing service right and left as these insurance companies back out of their bargain, and that's the way monopolies work. That's why the United States has racketeering laws to prevent people from becoming a monopoly. Mm-hmm. They haven't been exercised properly, in my opinion, to keep these conglomerates and these backdoor deals from taking place. And I think that's why we saw such a surge in the Bernie Sanders crowd, mm-hmm. is they see this corruptness, and there's some legitimacy of what he's saying.
Yeah.
The cronyism that takes place. In fact, it's called crony capitalism. It's not even capitalism. It's just flat
bribery.
Yeah, it's perversion. It's a perversion of justice, and we need to have clear sight to be able to see what is going on. And it doesn't take much today in our information age to be able to dig this stuff out if someone's really looking for it.
Yeah, and there are two responses that people have as they look at this crony capitalism. They say either number one, that the government should come in and take it over. That just creates a bigger monopoly and
it does.
Accentuates the problem. And the second option that people see is they say, okay, let's have the government enforce the rules that are already in place here. If a new rule needs set up, do that. Have the government enforce it as a third party that's disinterested. And that's ultimately what government should be.
Well, that was the role of government to begin with in the United States experiment, is that government was there to make sure that the contracts that were signed were kept. Mm-hmm. It was there to protect our borders, and it was there to make sure that people weren't taking advantage of other people. And what has happened is through, people that move out of Goldman Sachs into the Treasury Department and then go back to Goldman Sachs, or politicians that work in end up lobbying for companies and corporations and financial firms and whatnot as soon as they get out of office. Those are the types of things that have corrupted the United States. And I hope that we're in a turning point in our country where we turn back this corrupt crony capitalism and really start exercising the right of free trade again, even within our own borders.
Yes.
Otherwise, it's going to destroy the savings that is so essential to make an economy work efficiently.
Yes.
So, we kind of got into some extra curricular thoughts here today because, not very many people get into buying a life insurance policy, want to think about all this stuff. But I do want to say this. That is why it is so critical that we work with mutual companies.
Yes.
These are not stock-held companies, folks. We're not, paying to play anywhere. These companies are out there working for you. Mm-hmm. You are the owner of them.
Again, follow the money. As a mutual company, they don't have any stockholders to show profits to every quarter. So they can do what's best for the policyholders long term.
That's who they have to answer to, is the policyholders. And if you don't like what they're doing, you take your money someplace else, they fill it. And, and they're very good managers because of that, because they're not being paid to play someplace else. And they're not paying someone else to play someplace else. They're working hard to make your money grow so that they can take care of you and your family and the generations to come. That's their sole purpose for existence. And so that's one of the reasons I love the mutual life insurance companies. They don't have a price that someone has to pay. Mm-hmm. So until next time, when we talk more about solutions, money, and other things that create wealth in your life, it's been good to share this message with you, and we'll talk soon.